Hello and welcome to the PPP Forgiveness Instructional Webinar. We've got a bunch of information that we're excited to share with you as we go through the process today that's going to help make this as easy as possible for you to get the forgiveness that you are entitled to. My name is John Sweisberger. I'm a partner in Armanino's business outsourcing services practice. And today I'm joined by John Kogan, who's a director in our business outsourcing services practice, and Matt Petrosky, a director in our tax practice. So today we're going to go through three primary things. One, bring you up to speed with the ever-changing regulations associated with forgiveness. Since our last webinar, there have been a number of very important changes. So we want to make sure we highlight those and you are up to speed with the most current set of rules related to forgiveness. And then we'll step you through the process to forgiveness and the timeline for applying, and then dive in a little deeper on the forgiveness calculation model that you'll be working in, along with show you a bunch of helpful resources that can make that a much easier process for you. So Matt, let me bring you in and let you kind of get us started, and let's talk about what's changed in the forgiveness process over the last couple of weeks.
Great, thanks, John. So as you mentioned, there are a few new additions to the forgiveness. Obviously, since last time we've had the PPP Flexibility Act, and from that there were a few new additions on the SBA side as well in response. So one of the key new items is the new EZ form, but not everyone can take advantage of it. We've identified sort of those three areas that if you fall within one of these three buckets, you can take advantage. So if you're self-employed, sole proprietor, or independent contractor with no employees at the time of applying, and also in the basis of your loan application. If you're a business with no salary reductions and no FTE reductions from 1/1/20 through the end of your covered period, you can take advantage of it. And then finally, if you're a business with no salary reductions and you're unable to return to your pre-2/15/2020 activity through your covered period due to government restrictions from Health and Human Services, the CDC, or OSHA guidance, which kind of brings me into the new FTE reduction safe harbor. So this was added. There obviously were some FTE reduction safe harbors that are not new, but this one does allow organizations that cannot go back to their 215 activity due to adherence to guidance that came out from whether it's the CDC or Health and Human Services or OSHA related to the maintenance of standards. This is for social distancing, sanitation, and the like. So basically, if you're an organization that must run at 50% capacity, think of a restaurant that's following the regulations, then if you cannot hire people back or you cannot maintain that FTEs because of that reason, that is the safe harbor. And that also, if that is the only reason why you have an FTE reduction, then you may be able to use the EZ form. And then one new thing that you can do is file the application when your PPP money runs out. Prior to that, it was clear that you had 8 weeks, a covered period, or 24 weeks, and it was not clear whether you could apply in the middle. And now the guidance from the SBA says that you can. I think there's still some questions and still some guidance that we expect to come out as some of the questions may remain related to some of the filing before the 24-week period. But at this point, I think that's positive news that individuals do not have to wait until after the 24-week period to apply for forgiveness. And then finally, the maximum compensation cap per person. This is that 100,000 equivalent is now $46,154 over the 24-week period. Prior it was $15,283 over the 8-week period. And that still remains, if you do choose the 8-week covered period, you still have the $15,000 cap.
Great, thanks, Matt. That's a lot of big changes in the span of a couple of weeks' time with the whole new form and new safe harbors and new comps. That, of course, begs a bunch of questions. So can I pose you a few questions and you can kind of walk through the answers with our viewers?
Sure.
All right, let's go with the first one. If I choose 24 weeks for my covered period instead of 8 weeks, but I do take advantage of this ability to file for forgiveness before then because I ran out of the PPP money, does that create any risks for me as a business?
Well, I think we're still, as has happened throughout this process, and I mentioned there's still some additional guidance we would like to have. The 24 weeks in the example that the SBA provided, it essentially said you have to, if you have any reductions, think about those reductions. The salary reduction. So if you had the wage reduction of greater than 25%, what it does require you to do is extrapolate that. But it didn't necessarily say anything about the FTE reduction. So we do think it's reasonable to run your FTE calcs to the point where you file the application. But obviously we don't know. And if you do have you're impending some FTE reductions, I think that's just the only question.
Yeah, that's one we've got to be very careful of. Certainly before they gave us this option of filing in between the 8 and the 24 weeks, that looming FTE reduction factor became a major problem. This appears to mitigate it, but again, we anticipate there will be more guidance to come on that. Okay, second question. I've run out of money after 12 weeks and I apply then. What's the maximum compensation I can get credit for per employee if it's 12 weeks instead of the 8 or the 24?
So now we've gone past the 8 weeks. So we're clearly at this point in the 24-week covered period. That's what we're going with, and you can apply early. The cap on the 24 weeks is $46,154, and I know that begs the question of, well, in the 12 weeks for my 100,000 and over employees, can I just go to 46,154? Right now, the only two options are the 15,000 for the 8 week and the 46,154 for the 24 week. There's no in between, but we do think that if you look at the intent and everything that the SBA has tried to do, we don't think the answer is that you can squeeze 46,000 for a particular employee in that 12 weeks. I think the likely outcome is that it would be sort of a 12-week equivalent for that, and would not recommend necessarily squeezing that 46,000 into that 12 weeks.
Yeah, there'll be more guidance to come for sure on that because that is a gaping loophole at the moment that certainly a number of people are going to want to try to barge through while they can. We do not recommend it because it's likely to end up being kicked out later on down the road and create a bunch of rework for you, particularly because throughout the process in the various guidances that have been issued from the SBA, they have repeatedly talked about the desire not to create unintended windfalls for people. So this clearly would fit into that category if one were to try to do that. So be very careful in that one and expect additional guidance here soon. And speaking of windfalls, a lot of that relates to owners. So here's an owner question. Can I pay myself that $46,154 maximum?
And the answer is no. So the cap, as we know, for the 8-week period for the owner was $15,385. So if we move to the 24-week period, that cap is $20,833. So really, we're looking at the cap. So it's either you look at your Schedule C, your net income. So it's essentially the lesser of whatever you've included there, or one of those two numbers. So if you're under the 8 weeks, it's 8/52 of that amount of net income on your Schedule C, or if you're going with the 24, it's 2.5 months worth.
And you take the smaller of those two, right?
Correct.
Right.
Right. You don't get the cap if you haven't spent it, or if
right.
it's not your net income.
Okay. And to be clear, that's your 2019 Schedule C, even if you haven't filed
Correct.
that, right?
Correct.
Great. All right, so there's been tons of confusion around the safe harbors and the look back periods and the when am I clear and when can I make changes without affecting my forgiveness and all of those kinds of things. And most people know that in the Flexibility Act that came into being on June 5th, the safe harbor date moved from June 30th to December 31st. And so that kind of creates this question: do I now have to wait all the way until the end of the year to know if I actually qualify for safe harbor on either the salary or the FTE reduction factors?
So obviously, I think everybody knew about the June 30th on the 8 weeks. That's been pushed to 12/31. So that's December 31st. But if we do believe that you can take the safe harbor up to the point where you file your application. So you don't have to wait until 12/31. It would be the date when you file the application.
Unless you don't file until after December 31st, right?
Correct. Right. There is no requirement. Remember, you have 10 months to apply. So there is no requirement that you apply prior to 12/31.
Okay, and the last question that has come up repeatedly from many people looking for any kind of a loophole or an avenue to be able to expand their forgiveness relates to people who end up spending more on payroll costs than the actual value of the loan. So for example, got a $200,000 loan, ended up spending over the course of 24 weeks, $300,000 on payroll, but had to take a 20% FTE reduction factor and want to be able to apply that 20% against the 300, which would net them back to 240, and say, great, I get 100% forgiveness. Can I do that?
This is a clear no. And we did get confirmation from the SBA on this. So you cannot get around the reduction factors. We know that the two reduction factors just because you've spent more of your own money. So I think it's pretty clear that you need to stay within the parameters and can't get around it by just spending more of your own money on payroll.
So the government's not real interested in giving you forgiveness on your own money.
That's correct.
Okay, fair enough. Matt, thank you very much. That's very helpful. I know that anytime they make changes, which seems to be about 3 times a week, the answers seem to create more questions. Certainly, as this continues to evolve, we'll do our very best to keep everybody up to date on all the latest changes in the program. Matt, thanks again.
Thank you.
Okay, so let's jump into the process a little bit, shall we? There's 2 tools that are going to be very, very helpful for you and necessary for you in the course of you applying for forgiveness. One is the bank is establishing a forgiveness portal for you, which will be a place where you can upload all of your supporting documentation as well as upload the calculation model to enable the bank then to do the review process. So that portal will be going live soon, and as it does, we will certainly be alerting you via an email and a link to where that portal is. Okay, it serves essentially as a repository. One of the key things that's going to need to be deposited into that portal is the calculation model, and this will apply for everybody that is not doing the easy form. In other words, our standard form filers, which we expect to be the majority of the people that are filing for forgiveness. And we'll walk through this calculation model in great detail here shortly. But basically, at the end of the process, depending on which path you take, you're going to have an output that looks something like this, except with numbers filled in. So on the left is the standard form, which is the form 3508, which also includes a Schedule A. And on the right is the EZ form, the 3508 EZ, which you can see does not include a Schedule A and has substantially fewer fields to complete. In essence, there's really only 4 primary data fields for your spend. That's all you have to worry about in the 3508 EZ. And there's a reason it's called EZ, because it is quite a bit easier. However, just to reinforce what Matt was talking about a little bit ago, just because it's called easy and is easy to fill out does not make it easy to qualify for. So remember, you cannot use that form unless you can certify and can support through documentation that you meet one of these 3 criteria. And just to repeat them again, The first one is you're self-employed or sole proprietor or independent contractor. You had no employees at the time you applied for the loan, and you had no employees during 2019 that drove any portion of the amount that you applied for in the loan. So basically no employees last year or this year. So that's one criterion. If you meet it, great, you can use the easy form. If not, move to number 2, which again is you had no salary reduction factors in play, and in essence had no FTE reduction factors in play since the beginning of the year. Now, it doesn't specifically say it's an FTE reduction factor in this criterion, just to be clear. It does say that you had no reduction in the number of employees, not FTEs, employees, and no reduction in the average paid hours for your employees from January 1st of this year through the end of your covered period. Now, that certainly begs a couple of questions. What qualifies as a reduction in employees? Does somebody who leaves and it takes you 3 weeks to replace them, does that count as a reduction in employees during that one pay period? If so, does that exclude you from being able to use the EZ form? Because there's going to be a whole lot of those situations, even though you replace the position. And the second one is actually some very curious wording where they say a reduction in your average paid hours per employee during the period from 1/1/20 through the end of your covered period. Well, I can calculate the average of those paid hours during that period, but what am I comparing it against to be able to determine if there is a reduction? That's not been defined either. So that one could be a very stiff test, or it might be a fairly simple one. It's just some guidance is going to be required to really clarify what exactly those words mean. And then the third test, again, just to reinforce, was no salary reduction since the beginning of the year, and this unable to return to business activity due to federal requirements. Let's talk about that for just a second more. So the actual language is an inability to return to, meaning not that you had a reduction in business activity, because virtually every business in America had a reduction in business activity, but that you were unable to return from that reduction throughout the covered period. So having a reduction does not qualify you for this. Being unable to recover from that in any way, shape, or form because of these requirements throughout your covered period may qualify you for that. But keep in mind this, those were federal requirements that were required to be able to meet this test. Most of the guidance that came out to shutter businesses as non-essential or enforce social distancing rules and things like that were issued at the state, county, or local level. Now, those in and of themselves do not meet that test unless they relied on some guidance that came from one of those 3 federal agencies. So you're going to have to look very, very closely at the rules governing you as it relates to any of these. So I want to just make sure to reinforce those points that it may be easy to do the form, but it may not be easy to qualify for it. Okay, so if you do qualify for it, all you got to do is basically fill in the data. There's forms available online, and fill it in and upload it to the portal, and along with your supporting documentation, you're pretty good to go. So let's kind of walk through the timeline and the workflow for all of this so you have an understanding of what's going to be coming down the road for you. Okay, so the first thing is we're going to be publishing this calculation model to everybody here very shortly, and you'll be then downloading that from the portal or from the link that you get in the email and entering that data into entering your spend data into that model and then saving the file. We'll walk through this in great detail here in just a moment. Once you have completed that model, upload it back to the portal along with all of your supporting documents. And once all of the documents are in, we'll be able to begin the review process. But let's spend just a second here on the model and one important thing that you need to understand. The model was written in the latest version of Excel, and all of the calculations work just fine in that version. We do not expect, nor do we anticipate, that every borrower will be on the latest version of Excel, and we're not asking you to rush out to go get upgraded. If you're on Excel 2013 or 2010 or some earlier version, the model will still work, but some of the calculations will throw error messages. That's okay, don't worry about it. We'll take care of that through our process that we're gonna describe here in just a second. But just know that there are some version challenges with Excel because not everybody is on the most current version. And we'll walk you through what that looks like here in a little bit. So once we have received your model, as well as all of your supporting documents, which includes your Q2 Form 941, we'll pull that down. We'll do a review against those supporting documents of all the data that you input. And then we're going to go to this interim step, which is to create a PDF replica of Schedule A based on your data input because of that Excel version challenge. It's just much easier for us to be able to say, okay, based on what you have input and our review, which may disallow certain things if they're outside the rules or there were some errors that were input, we may need to make some changes. So we're going to stop you before you actually get to the Schedule A and the application itself. Remember, those are the outputs of this process. So before you get to that, you do the upload, we do the review, we come back to you with, here is a replica of Schedule A, and all you have to do is download that from the portal where we've placed it for you, and you can complete the Schedule A and your forgiveness application at that time, certify it, sign it, and upload it to the portal. And at that point, you're pretty much done. We'll take a close look, or a second look rather, at the application itself to make sure all the right boxes were signed and initialed and the right numbers are in there and there wasn't any transposed things anywhere, and send off to your loan officer an outcome letter. They'll do their final review and send you the final forgiveness notification, as well as to the SBA, the same thing. Okay, so that's the basic process we'll go through. Remember a couple of things. There's no rush on this. You have up to 10 months after the end of your covered period, which takes you pretty much to next spring before you run out of a window in which to apply for this. It's not like the loan itself, which expired June 30th before you, if you didn't get in by then, you weren't getting a loan. So you've got 10 months from the end of your covered period. So remember that. And remember that we're going to have this sort of two-step process for you here. You'll complete the model and upload all the supporting documentation, and then we'll come back to you and you'll do the second part, which is actually completing what goes off to the SBA, which is the Schedule A and the forgiveness application. Okay, so all this will be coming to you via email very soon. Look for that in your inbox. And with that, let me bring in John Cogan to the table. John was the author who spent literally hundreds of hours building this calculation model, along with some help from a lot of people. But John's been the driving force behind what is an extremely robust model that pretty much does all the work for you. So John, why don't you take it from here and walk people through what they can expect as they get into this calculation model.
Happy to do so, John. All right, so one slight difference from what John said, it does everything for you on the calculation side, but you do need to enter the data. So the data entry will be explained over the next couple of slides here. The model itself performs all the calculations, and you will want to have all your documentation ready before starting. You are certainly going to need payroll information for each payroll from January 1st of 2019 through the end of your covered period. You'll also need accounting records for the non-payroll costs that are allowed in PPP forgiveness for your covered period. So you'll want to have all of that gathered and extremely handy. preferably in a spreadsheet if you can, for copying and pasting for that payroll information. The non-payroll stuff is pretty minimal. Do not attempt to use summary report data provided by third-party payroll providers. It's actually very difficult to tell what's in those reports because they're typically not footnoted very well and you just can't see. So the model that you'll be provided with will ask you to enter data at the per employee per payroll level. As long as you do that, all the calculations should work just fine. And John mentioned earlier that there might be some Excel version limitations. When it comes to data entry, you really shouldn't see any errors on that front, so you should be in good shape there.
John, let me add one other point to the third-party payroll provider reports. We've seen reports from at least a dozen different payroll providers, the big ones as well as some of the not so big ones, that are all purported to be helpful reports for you to prepare your forgiveness applications. I can assure you that of the dozen or so that we've looked at, every single one of them had problems and errors in them. And generally, those errors would have worked against the borrower and ended up costing you money. Our objective here is to make this easy and maximize the amount of forgiveness you can get, not create issues where we can't see and trace information and or they've just calculated them wrong. For example, we saw one report that would have ended up costing somebody about $200,000 if that was the information they'd actually loaded in. It was clearly wrong information and we could see it without even knowing what's underneath it. So we want to make sure that you do not run into those problems. So while our ask here is a little bit more robust in terms of each payroll, each employee, there's good reasons for all of that. One, we want to make sure you maximize your forgiveness, and two, based on the rules the SBA put forth in terms of look back periods and who's included and who's excluded from various calculations, every bit of data that we're asking for is actually necessary in order to do those calculations.
Thanks, John. Great points all. All right, so let's jump into what the workbook will look like. These are our screenshots, but it'll look just the same when you get Excel open. You'll notice there are a number of tabs along the bottom here. Table of contents is the tab all the way to the left, and then over to owner's comp, which is numbered 7, owner's comp on the right. You'll see there are some direct links there in column B on this table of contents. You can use those links to go straight to the tabs, or you could use traditional navigation, clicking on the tabs at the bottom. Either way, easy to get around here. Next up is the general instructions tab. Number 1, we'll point a couple things out. Note the link top left back to table of contents, that's marked A. So you can, every tab has this back to table of contents link. You can click there to go back to the beginning and get yourself situated there. Item B here is pointing out a cell note. So you'll see there's a red box on the right-hand side, and it's surrounding and actually pointing to a little red triangle that's in the top right corner of this box. And that is a cell note. So any cell that has a cell note in it will have that little red triangle in the corner. And we've utilized cell notes to give highly specific insight and information regarding particular instructions. So you'll want to keep an eye out for any of those cell notes, and they'll have useful information that'll help you get through your data input more quickly and easily. Next up, you will see a whole bunch of cells that are not yellow. Those are typically headers or calculations, which you needn't touch or might be instructions. But the place where you're going to focus your efforts primarily are these yellow highlighted fields, or actually it's a yellow background with blue text color. That's where you're going to be entering your data. If it's not a yellow tab, then you can simply ignore it or not click on it, what have you. So just pay attention to these yellow fields. That's where your data needs to go. We want to make sure that your good work isn't lost, and therefore we'd like to ask you to use this naming convention. With this naming convention, we can be certain that the data belongs to your company. You can see it laid out right here, your company name plus the last 4 digits of your bank loan number, plus forgiveness data, no space there, plus .xlsx. No spaces at all. It'll look just like this example here, except for your company and the last 4 digits of your bank loan number. And as long as you're utilizing that, we won't lose your information and no one else will. It'll be very clear that this is your calculation model. All right, the forgiveness model has one real workhorse tab. This is tab 2, pay cycle 1. So most of your time is going to be spent inputting gross pay for each employee for each pay period from January 1, 2019 through the end of your covered period. This will be a task that will grow based on the number of your employees. And every column will be 1 pay period's worth of information. So that's going to be where you spend most of your time. There are subsequent tables to the right of this, and you'll want to make sure you scroll to the right until you run out of tables. To the right of this pay table is a table for hours paid for each employee. And this is for 2 2019 look-back periods and for 2020, January 1st of 2020 through the end of your covered period. So you're going to see multiple tables for hours. The second of these 3 tables will be for seasonal employers only. Seasonal employers typically know who they are. If you're not a seasonal employer, then you can leave that table blank, so that'll save you a few minutes. But otherwise, you definitely want to make sure to do the first and third table there. And then finally, when you get all the way to the right in this tab, you'll have a few different sections for entering the employer portion, of medical benefits, retirement contribution, and state and local taxes for the covered periods. There are instructions there, and there's actually instructions in column A and then instructions in each of those subsequent tables so that you know where and what data you're supposed to be putting in. So there are a few non-payroll data elements that you'll need to add. Tabs 4 through 7 are very simple lists of non-payroll expenses. You can see them listed here. Interest paid on mortgage obligations, payment for rent or leases, payment for utilities, and if applicable, payments to owners. Now, each of these tabs has its own instructions. They define what data is supposed to go in, and it simply totals everything up as you're putting it in. So that's very straightforward.
Perfect, thanks, John. And certainly we'll talk in a little bit about more information about how to navigate these spreadsheets and how to do all of the data entry and some of the assets that we're going to make available to you to make this as streamlined as possible. We know it will take some time, obviously depending on the number of employees that you have. But one of the things that is going to be very vital for you to understand, and we've had a number of questions, there seems to be a lot of confusion about the notion of incurred and paid expenses as it relates to forgiveness. So I wanted to take just a moment to kind of walk through what that looks like and how it works so that everybody can be clear on the rules and not be putting in data that is outside the rules, but making sure you get credit for everything that is inside the rules. So let's take this spring's timeline, and let's assume that a borrower got their funds on April 14th. Well, that begins their covered period, and we go for 56 days, that being the day of funding being day 1, so it concludes 8 weeks later on June 8th. We're assuming an 8-week scenario here in this example. Okay, so that's their covered period. Now let's look at some of their business operations. So they are a semi-monthly payer. for payroll, which means they pay on they pay based on the 15th and last day of the month. But they actually, that's their pay period, but they actually pay it about 5 or 6 days later. So in this example, their hours that they were paying for on about April 20th or 21st were for the period of April 1st to the 15th. So you can see that most of that payroll was incurred prior to the covered period. The payroll was paid during the covered period. And then we proceed forward. The second and the third and the fourth payrolls all paid and incurred in the covered period. But then the fifth payroll brackets the end of their covered period because it runs from June 1st to June 15th and actually got paid around the 20th or 21st of June, so well outside that covered period. So the question becomes, what are the allowable expenses for forgiveness? And that covers this period here in this example. Even though it's more than the covered period, it is taking all of the amount that was incurred in that first payroll because that payroll was paid during the covered period. So you don't have to take just that little sliver of April 14th and April 15th. In fact, you get to take the entirety of that first payroll in as payroll one paid during the covered period because it was mostly incurred outside but paid inside the covered period. Now let's go to the back end. It doesn't work exactly the same way on the back end. In fact, what you get is the portion of that fifth payroll that was incurred during the covered period is forgivable so long as it was paid in the next pay cycle. So in this example, your payroll that was incurred from June 1st through June 8th, at the end of your covered period, is what you would get to include even though you paid that payroll on June 20th or 21st, well outside the covered period. Okay, so I wanted to take a moment just to make sure that everybody's clear on that because there's been a tremendous amount of confusion on that. And this will help you maximize the amount of forgiveness that is available to you if you deploy this not only for payroll, but for any of your expenses. This is how it works. Okay, so you've been through the model, you've uploaded the data, you've got your incurreds and your paids right, and it's all complete. Now, stop, save your work, upload this along with all of your supporting documentation to the portal, and that will enable the review process to begin. Remember, don't complete the Schedule A or the forgiveness application itself yet. Do this work, upload it, and that allows the review process to commence. So, what happens after that? You'll have obviously a little bit of a break here in the process, but remember, it's a two-part process for you. So you've done part one now. We go to part two, which is the final application data entry. So after all of your documents and data have been reviewed, as I said earlier, you'll be sent a replica PDF of Schedule A and the final application. So you can see here an example of a replica PDF that will come to you that looks just like the regular Schedule A with numbers in it and everything else. Okay, that will be uploaded to the portal. We will notify you via an email that it's there for you to go download and pull it up on your screen. And once you've done that, you also need to download a fillable electronic version of the standard form application that will be at this site on the Treasury Department's website. You click that link, you will get what you see here on the right. Looks the same, except it doesn't have any numbers in it. All you have to do is type the numbers in the replica form into the actual form and then save and upload that to the bank. Why do we go through this process? Okay, a couple of reasons. One, as we talked earlier, there's the risk of Excel version errors that will make it impossible for you to actually see what goes into Schedule A because those are all calculated fields from the model. So we want to avoid that problem. And the second reason we do this, rather than us just saying, hey, here's your Schedule A and here's your form, sign here, we as the bank cannot and will not complete a form for you. You have to do that yourself. So we can tell you, here's the outcome of the review based on your data input and say, based on all that, here are the numbers, but you physically need to create the Schedule A and the final application form itself, which is not pictured here, so that the bank can rely on you did that, it was your data entry. We'll make sure it was the right data entry, but you'll make sure you'll be the one to enter that data for that reason, so that in essence the bank is not completing forms for you, because that kind of goes against all the rules of banking. So we don't want to do that. Okay, but that should be a pretty simple process. You just type in the numbers, pull up side by side, and away you go. It will look exactly the same. Okay, so that's it, you're done. So if you did the easy form, a lot simpler, but harder to qualify. If you had to do the standard form, this is the process you'll go through. And along the way, we have a whole bunch of tools available to help you succeed in this process. As we were talking about earlier, there's a lot of things that we want to make sure help you. The first of which being a complete how-to video on how to work that calculation model. So John gave you a very high-level overview. We want to walk through with you a more detailed model that looks something like this in the how-to video. So give me a moment to pull this up on screen, and away we go.
So here's where you would start entering information employee by employee. So for instance, if John earns $1,500 per pay period, and you'll see the checksum actually throws an error, and that's because it's looking at 5,000 and 1,500 and noting that there's a $3,500 difference. Now you and I know that you're not done putting your information in yet, so let's add Jane Doe. And coincidentally, she makes $3,500 per pay period. So that evens us out. And you would simply continue on adding the employee level information in this part of the grid, and the date and the total per payroll in this part of the grid. And hopefully you will soon be done. Once again, it will take you longer if you have more employees. Now this will cover a lot of pay periods depending on, and more depending on what pay cycle your company is on. If you need additional columns for more data entry, click the plus, and that opens up more columns so that you can easily have as many columns as you want and simply fill them up as necessary with your pay periods.
All right, so that's an example of what's in the video. It will be, it's about a 25-minute long video. It'll walk you through every step of the way in a much more detailed level than what John did in the webinar here today. So that's one of the tools that we want to make sure you have available to you. The second tool is a detailed user guide. And that is about 25, 26 pages long, as you can see. This is just the table of contents of it. And this walks through in painstaking detail every aspect of it as well, including things like how to save a file and what have you. Here's an example of just one little portion of that user guide that is filled with pictures and screenshots like this that talks about, in this example, where's column DK? It's in item A below, and the guide will walk you through every single step in this process and lay it all out for you, table by table, tab by tab, so that it's very clear exactly what you need to do, where and when. Please read this user guide. It's very important. It will save you from having to do rework down the line, as will that video. So those are both really important tools. I know the temptation for a lot of people is to sort of jump right in and start entering data. Think of it a little bit like an IKEA put together thing. Okay, I got a lot of pieces, what do I do here? And you go step by step through the documentation. It's the same thing here. As long as you go step by step through it, it won't be a particularly difficult process. Okay, so we have both that video and the user guide, and in addition, we have coming online here momentarily a completely searchable FAQ library You've seen the FAQ library that's been posted previously that was a PDF. This is now going into a searchable web page. There are something like 325 questions that are up on there now. It looks something like this at the beginning, and you can see the gray box in the middle where it's a very simple search function. Call it Forgiveness Google if you'd like. It's the same basic process. Just type in your question like, hey, I want a keyword around lease payments, and this is what you'll get. Everything that has to do with leases or lease payments pops up, and you can quickly find the answer to your question. Within 300 and some odd questions, the odds are that your question has been answered. However, if it hasn't, you may contact your relationship manager at CBC or visit this email box with questions about the model itself, and we'll be able to get back to you. All right. So Matt, John, thank you very much for all of your help in getting us through this presentation today, and thank all of you for staying with us and learning about this forgiveness process. We're excited to partner with you to get you all of the forgiveness to which you're entitled. Thank you very much.